Hello everyone, Mauricio Blanco here with Keller Williams Real Estate in Austin, Texas. And today I'm here with Sergio Guerrero and Stephanie Scalona from Elite Financing Group. They're one of the top mortgage team in the city. And today we wanted to discuss the benefits of the USDA program. We know the market and the economy is a little bit rough right now, so we're trying to bring some good information to share with you guys so you know how to make the best and how to get the best offer out there in today's market. So Sergio, why don't you tell us a little bit about you guys?
Thanks for inviting us, Mauricio. We really appreciate it. And like Mauricio said, USDA loan is a great loan program out there, but I'm going to tell you a little bit about myself before we get into it. I've been doing mortgages for 22 years, and I am a homeowner of 7, just to give everybody a heads up. And my belief in buying homes and building wealth is don't worry about the interest rate. I bought my first house on a 100% loan, kind of like the USDA program back in 2005. It was $123,000, and my interest rate was an 8% on a first and a 10% on the second. And what I'm telling you guys today is if I had let the interest rate scare me away back in 2005, I wouldn't be sitting on a $500,000 asset with just one of the 6 properties that I started building wealth with. So Mauricio's biggest goal today here is to really educate you guys on how we're going to show you how to get into a loan with no money down today.
Awesome. Perfect. I have a couple of questions here for you guys. So why don't we start with what are the advantages of the USDA loan?
The advantages of a USDA loan is, number one, obviously, guys, is a no down payment. With the shift in the market now, and guys, it has shifted from a seller's market to a buyer's market. Totally. So you buyers out there, you have the leverage now. For the last 3 years, if you guys didn't have an extra $100,000 lying around in the bank and you couldn't compete with the cash offers, Mauricio really couldn't go find you guys a house now. And when even if you did find the house, sellers were waiving everything, waiving contingencies, waiving the financing contingency, so you could, really compete against cash. Well, all that's gone, and now you guys have the leverage on the buyer's market. And when I mean leverage, Mauricio can now ask sellers to help you pay for the closing costs so that we can truly show you how to get in with a no down payment plus closing cost.
Almost no money out of pocket, basically.
No money down.
Because if you have the seller paying for your closing costs and you are able to qualify for a USDA loan, you basically can buy a home with
Zero money
out of pocket.
So let's just say awesome. Mauricio finds you guys a $300,000 house on a USDA loan, and he's going to need to put $3,000 earnest money down. Earnest money is a way that you're showing in good faith to tell the seller, hey, I want to buy your house. Here's $3,000. With Mauricio asking to get the seller paid closing cost, Stephanie and I will show you how to get the $3,000 back at closing.
Okay, awesome. Well, number 2 is, what do I need to qualify for a USDA loan?
Minimum credit score on a USDA loan for an automated underwriting approval is a 640 FICO score. We can go below 640. It is much more challenging to go below 640. So Stephanie and I will examine every file that comes in to see if they qualify below the 640 FICO score. But really, guys, hit that 640 FICO score. And one thing that Stephanie and I do with our clients is if you do have a 600, 615, sometimes it's just a little bit of tweaking that we need to do on your credit. We're very, very savvy at fixing credit as well. We'll get you to where we need to get you to qualify for a home.
And that's a really good positive and something that I like working with you guys. You're very knowledgeable about the credit situation. So you save some clients of my clients to go into a program where they have to pay monthly or pay, crazy amount of money, thousands of dollars to get the credit fixed, when you could just with kind of like guide them how to maintain the credit payments and how to consolidate their debt.
Absolutely.
Makes a difference.
So what Mauricio is saying is, there are credit repair companies out there. We want you to avoid credit companies, guys, because if you're in a credit company, that means that it may take you 6 months to 12 months to really fix your credit. But Steph and I have a software that we have when we pull your credit, and it does show me ways that I can fix your credit. 65% of the time we can make it happen. There's always that 35% chance because credit and unpaid credit, we really need a lot of help with. Sometimes you have to pay it and get what's called a deletion letter. And some companies out there will give you the deletion letter and some will not. So if they don't give us a deletion letter, then we may have to refer you to a credit repair company. We don't typically refer anymore out. We've actually now are referring those back to the realtor, so Mauricio can choose his credit repair guy that he wants to work with, and then we'll get you in a position to purchase.
Awesome. So going back to the USDA loan, so basically as long as you have a 640 credit score, you're pretty good to go.
You're pretty good to go.
Can you do it under 640 credit score?
You can. You can. It's just we call a manual underwrite, and there are what's called ratios for a USDA loan. Front end ratio is your house to your debt, and then there's a back end ratio, which is everything on credit plus the house is your back end ratio. For a manual underwrite, it is tough. You're going to be limited to 28% on the front end on a manual underwrite and 41 on the back end ratio, which is very difficult, guys. The income's got to be perfect.
Very tight.
Very tight.
Very tight.
On automated, we can go up to about 30, just below 33% on the front end ratio, which is much better. Mm-hmm. And we also can go up to right below 46% as well. And another topic that Mauricio and I are also going to tell you guys about today is we do have a program called the Mortgage Credit Certificate.
The MCC?
The MCC is what we call it in the terms in the real estate and mortgage world. This is a program where we're going to show you how to get free money on top of you getting into the home for free. And the great thing about the MCC program, guys, is...
But don't tell them yet.
Oh.
We're gonna get there. We're
Okay.
gonna get there. Let me just finish on the credit situation.
Let's do that first.
Does the interest rate changes when you go from a 640 plus to a 640 minus or under?
Yes, it is. Obviously, the higher the FICO score, the better the deal that you're going to get.
Okay, perfect. So my next question, Sergio, is how do I know what areas qualify for the USDA loan?
The USDA area, USDA stands for rural, just to give everybody a heads up. Rural areas, like in Austin, rural areas are like Gerald, Texas, parts of Manor, Lockhart.
Elgin.
There are a few places in Elgin, and there's some on the east side of Kyle and Buda, just little pockets, but there is a website that you can go to.
Okay, and we're gonna leave that website at the bottom just so you guys know, and I'll link it also to the description as well. Okay, awesome. So there's a website that you can just plug in the address and it will tell you if it qualifies or if it doesn't, right?
It does. You just go onto the website, okay. You click on property eligibility, you type in the address, and the map will come in and it'll say eligible.
Okay,
you're eligible.
Sweet. So you already touched on the ratios, on the income to debt ratio, right? So we already know that the front on 640 plus credit score is the front ratio. What is that ratio, first of all? What
ratios are it's called debt to income ratios. The front end ratio, like I said earlier, is how much your house payment is to your total gross income. And the back end ratio is everything that shows up on the credit report plus the house is your back end debt to income ratio. Okay,
so as a buyer, do I have control over the ratio? Let's say you tell me, Mauricio, your ratio is a little bit too high. Can I change that?
We can, if you've got money. We can get creative as well, just to give you a heads up. If mom and dad can help you out and pay some debt off, that can be an option. Mm-hmm. If mom and dad can even refinance a car, for a perfect example. Let's just say you've got a $780 a month car payment, and that's totally messing up all the ratios here. And mom and dad don't have the cash, but they want to help you get into a house, or grandma or uncle or whoever, have them refinance the car, put it in their name.
Okay.
And then Stephanie and I will pull a fresh credit report where the car doesn't show up. So that is the one thing about the 22 years of lending that I have learned to do, is to get extremely creative to help you guys get into a house.
And that's why you guys are a top producing team in the area for sure. Okay, so we touched on the credit, we touched on the debt to income. How about any options to buy land and build with the USDA?
I still need to check on that one. You can go to there are new construction lenders that are in USDA areas. If you really have your heart set on you want something brand new, there are total areas where builders are building houses and they're USDA available. So you can get new construction on a USDA loan.
Okay, awesome. And how about, can I buy a manufactured home with a USDA loan?
You can, as long as it's brand new, like
Okay.
100% brand new. I do need to do a little bit more research on that to see if you buy the land and then we put the manufactured home from the manufacturer on there, if we can go that route. But again, if you can find some sort of developer that's that's already doing it for you, Mauricio will just take you to that community and just sign you up.
So let's say there's a property that already has a manufactured home on it. Mm-hmm. Can I buy? We can definitely buy it.
As long as it's brand new.
As long as it's brand new.
As long as it's brand new.
Okay.
That's the only one.
So if it is a home that has been there for 5 years, 10 years, you cannot.
It's not qualified for USDA.
Got it. Perfect. Good to know. Good to know. All right, Sergio. Well, thank you so much. Is there anything else that we need to touch on the USDA?
There are income limits. Just to give everybody heads up, the income limits for a family of 1 to 2 is $126,850. So as long as you make less than $126,850, and if it's just you and your wife, you qualify income-wise for the program. If you have a family of 5 or more, it's $167,450.
Okay.
So that's great income for people to qualify for the USDA
So the more
loan.
members in the family, the higher the limit is in the
is.
income.
Right.
Okay,
It is.
sweet. That's great. That's great.
And there is one more thing about the USDA program. It is geared towards first-time home buyers, or you truly do need help for the USDA program, a zero down payment. If you've got great reserves or assets, you don't qualify for the property. It's if you've got enough to put down 20% and pay for the closing costs, you will not qualify for the USDA program.
Okay, got it. So if you have a lot of money saved up, basically, to show, then you don't qualify for that program. Because it makes sense. What they're looking for is to help out people
They're looking at
don't have the assets, don't have the funds to buy.
Exactly.
Okay, that makes sense. So if you have a lot of money, sometimes it's not a good thing. But it's also a good thing because they could go ahead and buy it at 20% down, right?
Absolutely.
Okay.
And guys, buy property. The reason why people get rich in real estate is because they buy property. Don't let interest rate come into play. Don't let anything slow down. We need to pass houses on to our children, and that's how you build wealth. And that's what I want to train everybody that I did, because I came from a pretty tough background, and I learned all this on my own. I'm just giving everybody a heads up on this video. My mom was was a school teacher, and my father was a retired musician and out of work. So, everybody knows how much teachers make. There was 5 of us kids. So,
wow.
You can live the American dream as long as you really want to become a homeowner and start building wealth. So what do I want to tell you guys?
Awesome. And Sergio is the team leader, and Stephanie is the team leader on the side of the Spanish-speaking customers. So thank you so much, guys, for your time, and thank you for sharing this information with us.